Hey everybody, it's Jack and welcome back. I hope you're all enjoying your long weekend. Since it is the weekend, it is that time of the week where I go over my Wealthsimple small account challenge and update you all on the progress. We just finished week number 9 of the challenge, so just over the 2-month mark. And for anyone who's new to the channel and wondering what it is I'm doing a Wealthsimple small account challenge where my goal is to go from a $1,000 account and build it up to a $100,000 account through saving like crazy and smart investing, with the end goal of one day hopefully being able to retire off of my investments. That is the dream. So as always, in this video, I'll go over the week that was and talk about the stock market in general, and then I'll go into the stocks that I bought, if there's any that I sold, and then I'll go into my Excel spreadsheet and go over my dividend tracking, as well as show you all the positions I've added to, and then we'll go over at the end my watch list for the week ahead. So talk about all the stocks that I think are good buys going into next week and that I'll be looking to add to my personal portfolio and my overall thoughts for the stock market going into the week ahead. So without further ado, let's jump into the video and get started. To briefly touch on the week that was with the stock market, we had Friday off, so it was a shorter week with only 4 trading days. The week started off pretty flat. However, on Wednesday and Thursday, we saw some upwards momentum, and both the Canadian and US stock market finished the week in the green, both being up around 1 to 1.5%. So an overall pretty good week for the stock market and hopefully all of your portfolios along with mine. So that will lead us right into this. Let's get into my account update and my status. So as of right now, my account and portfolio is currently sitting at $3,723.70, with Friday being up around $24 or 0.65%. And I finished the week up 1.16% or $42.58. And for the past month, we're actually up 7.11% or almost $250. So over the past month, the account has actually been producing really great results. And if we look at the all-time, we can see that the all-time, the account is just up 2.44% or $88.70. So we're chipping away, getting into the green. So as you can see, March was a great month for the account. However, February was not quite the same story, and that's why the overall account all time is only sitting at 2.44% versus the past month being up over 7%. So now that we've quickly touched on the account status, let me now jump into one brand new position or brand new stock that I added to the portfolio this week. I added a gold mining company called Kirkland Lake Gold, ticker symbol KL. This stock trades around $40 and I added 3 shares to my portfolio. This is a brand new stock in my portfolio that I'm really excited about. Not only does it offer a 2% dividend, but it also has extreme growth potential coming in the next few months. Gold is always seen as a hedge against inflation or the stock market going down, and I really think we might see substantial rise in inflation over the coming year because of all the money that's been pumped into both the Canadian and US economy. So instead of buying gold directly, I'm buying Kirkland Lake Gold, which is a gold mining company that directly benefits if the price of gold were to increase due to inflation. So I think this is a great move because Kirkland Lake has been seeing some great profit and revenue growth over the past few years, and it's currently trading at a massive discount. The stock has almost dropped 50% from a few months ago. So this would allow it, if it gets back to those levels that it was seeing around $70, because it currently trades around 40, you're seeing pretty close to a 90% increase on your investment or a 90% gain, which is crazy. And remember, this company does offer a 2% dividend, which is really just a bonus and cherry on top, because I'm really investing in this one for the growth potential that this company has. So even if the stock market doesn't go down or inflation doesn't go up, I think this is still a great stock and will grow in share price no matter what. So it's kind of a win-win. So I added 3 shares of Kirkland Lake Gold around $41 and it's already at 44. So already seen some great growth, but I think it has a lot more room to run and potentially can get back up to that $70 range and lock in some great profits. So getting into stocks I sold, I usually don't sell any stocks as I'm a long-term investor and all the stocks I invest in have really great potential 5-10 years down the line. However, I did slightly trim one of my positions in my account. I sold around 17 shares of Standard Lithium, SLL, and this was purely because I wanted to bring down the weight in my account that Standard Lithium was taking up. As you know, Standard Lithium and H2O Innovation are 2 largest positions in my account, and they are both very high risk, high reward penny stocks. So I really wanted to bring down the weight of Standard Lithium because it was sitting around 17% of my account, and Standard Lithium, in my eyes, is my highest risk, highest reward potential payoff stock, as I do think this stock could get up to around $20 in value over the next coming years as the lithium demand increases, as does the price for lithium. So I'm really excited about Standard Lithium long term, and this doesn't change my opinion on it. I'm still super bullish on this company. However, I purely sold 17 shares out of my 150 to just bring down my weighting to under 15% of my total account when it comes to Standard Lithium, because that makes me feel a little bit more comfortable. So it was purely to bring down the weighting of Standard Lithium, de-risk my account a little bit more, and put that money into other stocks. So again, I sold 17 shares around the $4 mark. So I got a nice little 6 to 7% increase from where I originally bought in. I'm still holding around 130 shares of Standard Lithium, and it's one I'm super excited about long term. So now that I've gone over the one brand new position in my account, as well as one position that I slightly trimmed over the past week, let's now jump into my Excel spreadsheet where I track all my dividends and my portfolio breakdown, so I can go over how my passive income has been increasing as I buy more shares of dividend stocks, as well as all the other positions I own and added to last week. So jumping into my Excel spreadsheet where I track all my dividends and my portfolio breakdown in a simple and easy way, I'm almost done switching this over to a Google Sheet and also adding in some new really cool functionality. So that should be finished and ready to share out with all of you so you can use this exact same template in a Google Sheets form by next week's update video. That is the goal. So starting with all of the positions I currently hold, I'll go through them and talk about the ones that I added to last week. So the first stock in this list that I added to last week is TELUS. I added one share of TELUS last week. If you didn't see last week's video, I talked about how TELUS raised a bunch of money, but this caused a dilution in shareholders, so the price dropped 3 to 4%. And my current average cost is around $26, but the stock is currently trading in the low 25s. So at the beginning of the week, I picked up one TELUS share just over $25, bringing my average cost down, so that's good. The next stock that I added is SmartCentres, SRUUN. This is the only real estate investment trust that I own. The reason I picked up one share of SmartCentre is first, it offers close to a 7% dividend and pays out its dividend monthly, which is awesome for monthly cash flow. The second reason is that SmartCentres as a company just got granted the privilege to buy back 10% of the current outstanding shares in circulation. The executive team and management team passed this notion. They think the company is undervalued at the current stock price, so they want to buy back shares of the company, hold on to them as the company grows, and sell them back out at a later date when the stock price is appreciated. So this is a great sign if the management and executive team currently thinks the company is undervalued and want to buy back shares. So this was a signal to me to add to this position. And then as previously mentioned, the next company I added to is my brand new position in Kirkland Lake Gold, which last week I picked up 3 shares at $41.06. And I've currently already seen around an 8% increase from this price. And it currently makes up around 3.7% of my portfolio, but I plan to continue adding to this over the next few weeks. And then the other 2 positions I added to last week were 2 of my ETF positions. I added 1 share of the Canadian Tech ETF early in the week, XIT. This is one of my growth ETFs that I said in my last week's video. If tech began to sell off even more early in the week, I would be buying more of this, and it did. My average price was around $46 for XIT, and it dropped down below $44. So I snagged 1 share, bringing my average cost down substantially, over 70 cents, down to $45.37. And this now takes up 3.8% of my portfolio. Again, this is an ETF that is comprised of the top Canadian tech companies that I think is really going to grow over the coming years, such as your Shopify, Enghouse, Constellation. And then I also added 1 more share to the old trusty and reliable Vanguard Canadian Dividend ETF, VDY. This is an ETF comprised of high-yielding dividend stocks in Canada, such as the Canadian banks, utilities companies, telecom companies. So there is a bit of overlap with this ETF and the positions I currently hold. However, this is really my play to get more exposure to the other Canadian banks besides TD that I own in this portfolio. And I really like this. It's a stable way to get invested into some high-quality dividend stocks. So those were all the positions I added to last week. Let's now see how that impacted my dividend tracking. So we can currently see that my annual dividends from my investments is at $81.11, up around $8 from the previous week. So by adding these few shares of dividend stocks, we were able to increase our annual income by around $8, which is pretty sweet. And our monthly average went from $6.14 last week to now being at $6.76. So around a 60-cent increase in our monthly dividend income. And again, like I always say, we just constantly chip away at adding a few dividend shares here and there, and this will just continue to snowball and grow faster and faster in the years to come. So now diving into my portfolio breakdown where you can see all the weightings of all the stocks in my account, you can still see that SLL, Standard Lithium, and H2O Innovations are my two largest positions, sitting at 14.3% and 13%. But as I mentioned, I slightly trimmed my Standard Lithium. It was around 17%, and I sold a few shares to bring it down to that 14.3%, just getting it more on par with the other stocks in my account. And you can see my new position, Kirkland Lake, sits at around 4%. And then my biggest dividend positions are 10% in TELUS and 9% in AQN, both great companies that I love. And looking at my penny stocks or high growth stocks in general, they now take up around 35% of the account. This was sitting at over like 60% a few weeks ago. So we've done a great job of de-risking the account and bringing these down by adding more heavily to our dividend and ETF positions, and that is the goal. I still want to bring the total for these high growth penny stocks down to around 30%, and my goal is to also get around 30% in ETFs. We're currently sitting around 20% in my ETF positions, half in growth ETFs and half in dividend ETFs. And my dividend stocks currently make up around 45% of my account, so they're pretty on par where I want them to be. I just want to increase my ETF positions as well as my dividend positions slightly. So again, these kind of charts are a great way to quickly, at a glance, see your portfolio breakdown and the different weightings. So that's my portfolio breakdown. And let's now jump into this week's watch list, which is really exciting. So my goal for the week ahead is to really add to my positions in my account that take up the smallest weighting. So help boost up my smaller weighted positions. So for growth, like I said, I want to add to Kirkland Lake Gold. I think this is a great growth stock that also offers that small dividend of 2%. So I'm looking to add one a share of Kirkland Lake Gold below $44, hopefully. And then another position I want to help beef up is my Vanguard S&P 500 ETF, VFV. I meant to add one of these last week, but I ended up going with Kirkland Lake Gold instead. So this week, I really want to make sure I add one share of VFV, as it is my smallest ETF position, currently sitting at around only 2% of my account. And this is also a great play for more US exposure within a Canadian account like my own. And then for dividends, I want to add TD Bank, one more share, hopefully around $81 if we can see it drop. Again, TD is only sitting at 2% of my account. So by adding one more share, I'll boost that up to around 4% as well, and really get some more exposure to the great Canadian banks that offer a nice dividend and see consistent growth year over year. And then two more dividend stocks on my watch list to add to next week are Brookfield Renewable and Algonquin Power. The reason I want to add to these two stocks because they both have strong ties to the renewable energy and clean energy sector. And late last week, Joe Biden came out and said that he is putting forth $2 trillion to help boost the infrastructure in the United States by supporting and improving the expansions of highways and roads, as well as the support for EV or electronic vehicles infrastructure and the clean energy and renewable energy production. So I think that this $2 trillion will greatly impact the clean energy and renewable space in the United States and directly benefit both Brookfield Renewables and Algonquin Power and Utilities, as they are both linked to renewable and clean energy. So that's my watch list for the week ahead and the stocks that I plan on adding to and building up my positions in. So that was my spreadsheet as well as my watch list for the week ahead. And just to recap, again, I plan to focus on adding to the positions in my account that are currently the smallest in weight, help bring them up, such as TD and VFV. And then I also plan to target dividend stocks that are focused on the renewable space, such as AQN and BEPC, as these are two stocks that will greatly benefit from the $2 trillion that Joe Biden has committed to infrastructure, EV support, and then clean energy. So both of these will benefit from the clean energy side of this $2 trillion. And I really think these are great stocks long-term that offer a dividend and will see great growth in the years to come. So two of the ones that I'm most excited about, I'll be adding to them over the next week and into future weeks ahead. And just to wrap up the video, remember that I started this journey just over 2 months ago, so not a long time ago, and I've learned so much from the small account challenge. So this is the part of the video where I urge you to start your own challenge, whatever it may be. Start with $100, 200, it doesn't matter. As long as you just get going, take the plunge. You will not regret it in the long run, and you'll thank yourself later. So I hope you guys enjoyed this video. If you did, please smash that like button. It means a lot and helps the channel grow. And subscribe if you haven't already. Lots more content coming your way, and I'll see ya in the next one.